traders make their money when the market's closed, doing this kind of stuff. So that way you have your game plan together. You know where to look. You know what to enter. You can set your alerts, set your buy orders, set your sell orders, and the market opens. Think about it like a football game or anything else, right? Like the game is won or lost in practice. Like once the game happens, you just execute what you practice.
In the last few episodes, we heard Cam talk about what a good setup looks like and how to trade it. But in this episode, we're going to zoom out and answer a more important question. How do you actually find those setups in the first place? Cam's going to walk through his full process for building out a watch list, starting with market conditions, then using screeners to narrow down thousands of stocks into a small group worth paying attention to. Along the way, he also explains why most traders are looking in the wrong places and how to focus on strength, momentum, and institutional flow instead. If you've ever felt overwhelmed by too many charts or unsure how to effectively use your limited time, then make sure you're watching this one on Spotify or YouTube.
So yeah, I think today we wanted to go through like how to build out a watch list. So kind of we've talked about like, you know, what the setup looks like and the 5 rules and everything, but that only works if you know like how to apply it and like where and when to apply it. So
right,
we can
absolutely.
we can go through that. And you know, we were just talking about this. It's, I don't know whether it's a fortunate or unfortunate week in the market. So we're doing this, you know, the last week of March 2026. The war in Iran's going on. It looks like things are about to escalate and get worse. The market lost the 200-day moving average this week. So big picture, like you just flat out shouldn't be trading this week. Like I don't care. You just should not be trading. This is not a week to be messing around. But I think that's actually a good point to bring up, because as you do this process, that is the first thing you do. Like that is the absolute first thing. However you want to gauge market sentiment, you know, whether you're trading gold, bonds, oil, crypto, whatever, you need to have like the broader market context in mind. But yeah, you have to have that in mind, because that is so important. Because it's like traders, we try and trade momentum, and so you can think of it like surfing. And so like, you know, waves come and go, like they'll go in and out and in and out. But if the tide is going out, like you're being pulled out. Like, yes, you can fight the trend a little bit. You can fight the current, but you know, in trading stocks or, you know, swimming in the ocean, right? Like if the current is going out, if the tide is going out, if the trend is going down, that's where everything is going to go. Like every now and then something might move against it, but like if the consensus momentum is moving against you, like you're fighting a losing battle, and it's best to go with the trend or just wait until, you know, the tide starts coming back in, until the storm passes, until conditions improve. So that's the first thing you always look at. I'm gonna hide the watch list here. The first thing you always look at is what's the broader market doing. So there are 2 things that I check. So when I want to see the broader market itself, I use futures. I use ES because this is the futures of the actual S&P 500 index, not SPY. SPY, and it's important to note, SPY is an ETF. SPY is not the S&P 500. It is an ETF that is meant to track the S&P 500. So there can be situations where the S&P 500 has lost the 200-day moving average or not lost it, and the SPY ETF may have. So you could get a false sense of how things are actually doing, or if you're looking for like a specific indicator, it might fire on one symbol and not have fired on the other. So if you're looking for broad market sentiment, use either ES futures or use SPX.
I was going to say, do you use SPX?
Yeah, SPX. XPS is the actual index itself. So if you go by that, yeah, you can see here on Thursday, so actually almost 2 weeks ago now, the market lost the 200-day moving average, was actually below it for a day. And then Monday, this past week, we tried to regain it and lost it. So big picture, what does that mean? For me, we're now in a bear market. Okay, I don't care about the technical definition that whatever financial I don't give a shit. When we're below the 200-day moving average, we're in a bear market. When we're above the 200-day moving average, we're in a bull market. Real simple. Right. If you look at the data, the average up day when we're above the 200-day moving average is about 2 times the size of the average down day. And when we're below the 200-day moving average, the average down day is 3 times greater than the average up day. Okay.
Cool.
So, and and some of that is it's multicollinearity, right? Like it's because the moving average is a derivative of price itself. So of course that's how it's going to work. But
Right.
either way, the trend there is, look, when the average down day is 3 times greater than your up day, why are you looking for longs? Like you're playing
100%.
a losing game, like the
Yeah.
odds are against you. And that's what trading is all about. Trading is about putting on a position when the math is on your side that it's going to move in the direction you anticipate. So,
And so
first thing, yeah.
do you slow your trading now, or do you just flip to short?
So there's one other thing I'll point out real quick, or one other metric I actually use that's like a hard and fast rule. But in general, for the 200-day moving average, no longs, period. When you're below this, no longs. You don't take any new positions, no long-term, no short-term trades. If you have a current position that you're in and it's profitable, it's green, and the market loses a 200-day, take profit that day. I don't care where it is. Take profit. Sell 10%, 20%, lock in something, and move your stop. Like wherever it was, move it up a little bit. Move it up to that week's low or the previous day's low. Lock in your profits, okay? Maybe you're in something like Kroger. Like you look at what Kroger's done the last little bit here, right? And I had a trade actually put on in one of my 401k accounts for Kroger, right? Like it's a defensive stock. It's a grocery store. Like it's going to move up, right? Because no matter what happens, people are going to still go to the grocery store. Okay, so some stuff like this, you can leave on. If you're new to trading, don't do this. If you're experienced and the market loses the 200-day, okay, this is because of something in the financial sector. So how do I hedge that with bonds? Or, this is, war going on in the Middle East. Well, how do I hedge that with defense contractors or things like utilities or consumer staples like, grocery stores, Walmart, Costco, that kind of stuff. But in general, when we lose that 200-day, get out and just wait. Just be patient. And again, when you're new, don't even try shorting the market. Again, we were just talking about that. Like shorting the market is its own thing. Like it is, in theory, the same rules apply. And you can absolutely use the 5 rules that I teach to short the market because it literally works. But putting on the positions, taking profit, and sizing is very different going short than long because the market's not designed to go down. Like it is designed to go up, and it doesn't like going down. Usually when you see the market going up, it does kind of stair step, but the stairs are very shallow. When the market goes down, it stair steps, but the steps are big. They're very volatile. So if you're not confident in your system and how to enter and exit, you can lose a whole lot of money trying to go short. And you could be right. You could be conceptually correct that the market is going to go down, but your entries when it comes to shorting the market have to be very, very precise, especially if you're going to do options. I guess one thing if you're just going to like literally sell short and like borrow shares or use an instrument like, SQQ, we were just talking about that. That's one thing. But yeah, especially if you decide to mess with put options, you got to be careful. So,
okay.
Yeah, does that make sense to help?
Yeah.
Okay. The other thing on market sentiment, and I think this is probably the 2 best single indicators. So I'm on the Qs here, and this is what I use for trading market sentiment. I use the QQQ, even though it's an ETF, that's fine. The red line here is the 20-day simple moving average. Here's the rule. When price is below the 20-day moving average and the 20-day moving average is going down, you have to change your trading. When price is below the 20-day and the 20-day is going down, 2 things I recommend people do. 1, you cut your size in half. So whatever your normal position size is, say it's 5%, you do 2.5 at most. Okay. And you take profits quickly. So if you would normally wait 3 days to lock in profits on a trade that runs, or you want to wait for it to go 10% before you take profit, faster. Like wait 1 day. Okay, because you'll notice that in the charts, and some people in my room have been pointing that out for like 6 weeks now. They're like, wow, everything that breaks out gets sold off like the very next day. And even here, look on the Qs. It's a perfect example. There's a nice little diagonal here that fits the 5 rules. We get a pop here on 25 February, and then the very next day, what happens? It's sold off.
Yeah.
That's what you'll be seeing across the market when this condition happens. Price is below the 20-day simple moving average, and it's going down. It can be below it, while it's going up, and that's just like a normal garden variety pullback. You're safe. It's not a real big deal. But when its price is below and it's going down, you need to make some adjustments if you keep trading. Honestly, if you just want to say, hey, that condition has been met, I'm not going to take any new trades now, or maybe only like gap and goes, which is what we've been running for several weeks now. That's fine. The other thing that ties into the 5 rules, higher highs and higher lows. When you see the opposite, when you start seeing, like here on the Qs, lower lows and lower highs, lower lows and lower highs, so that's the opposite. The trend is now down. Again, make some kind of adjustment. Don't take any trades. Be very specific. Cut your size in half. Take profits quickly. Definitely, if either one of those conditions are met, you want to stop taking options. Like,
Gotcha.
Don't mess around with options, because it's just too dangerous, right? Like, switch over to shares. Okay. That's the first thing when it comes to building out a watch list. Real quickly, look at market sentiment. Are we above the 200-day moving average? If you are, okay, cool. We can trade the 20-day moving average. Where's price on the Qs? Is it above it, and is it going up? If yes, all right, cool. Green light. No restrictions. Execute your system. But when you start failing those conditions, 1 or 2 or 3 or all of them, it's time to change your playbook, because if you blow your account, you can't play the game.
Right.
And that's the thing with trading. You want to play the game as long as possible, because you never know when you might catch a trade that could, change your account, change your life. But if you're not in a position to be able to participate in the market with the appropriate size, then that can't happen. So risk management has to be paramount importance. And right now, as things stand, this is not a good market to participate in. I put some of my performance numbers up in the room over the weekend, and we can mention those if we have a chance. Like, I made money this month, but I traded way too much. Like, I took way too many trades. So stop there. I think that's good. See if you have any questions, and we'll jump into the screeners.
No, I don't think I do until we get into them. Yeah, this is good. Market sentiment, as always, we should almost highlight that all the time, because it's
all the time.
Got to be front and center.
All the time. So, okay, let's go through the exercise. Let's say, let's still go through and look at the screeners. So I have 4 that I use, maybe 5, 4 screeners. I always start with the best one. So this is my 20/50/200 screener. It's got the most parameters, second most parameters. This is to define the highest momentum, highest probability setups, the strongest names in the market. So the 20/50/200 condition, what I'm looking for here is the 20-day moving average to be over the 50 and the 50-day moving average to be over the 200. So I want to see them all in correct alignment. Okay, and that's what the 2 conditions here are. Right. Price over $5. That just makes sure you're not looking at penny stocks. Okay, like if you like to trade penny stocks, cool. Institutions don't buy penny stocks. They just fundamentally do not. And we're looking to trade around institutional price action. The next thing, performance over the last 12 months, 200% or more. Several, trading legends, Stanley Druckenmiller says he uses this. He's looking for stocks that are going to go up 1,000%. Well, before they go up 1,000%, they got to go up 200%.
Always, every time, yeah.
Right? Like you can't skip numbers. That's not how counting works. So last year, we have 200% momentum. And that establishes a long-term trend, right? Like over the last year, this stock has moved 200%. And yes, it could have moved that very quickly, but over the last year, it's the general trend is up. So again, this is about your 200-day moving average. And the 200-day moving average actually works out to be about 10 months worth of data. So that aligns.
Does that filter out a lot of stocks?
It does. It filters out a lot. Honestly, the 20/50/200 criteria is going to probably filter out 80% of the market. This will give you another 10%, and then the 3-month performance. So this quarter, we want to see it up at least 50%. That's going to take you down even more. And that's what we're looking for here. So here's like our long-term indicator, and here's our short-term. And then the 20/50/200, that really helps make sure that something hasn't had the trend fall. It hasn't like cut off very quickly all of a sudden because of
Right.
it, very recently, because if it has, it could meet these first two conditions. But then if the 20-day falls below the 50, that means it's pulling back very sharply. So,
I gotcha.
yeah, so that's the screener. And then to look at it, well, so we can look first, see like how many meet this. So this is the entire market of stocks that meet these criteria. I think TradingView looks at like 17,000 assets. Out of 17,000, there are 53 that meet these criteria.
Right. Yep.
So then I'd go to the chart view. I'd throw on the 6-month filter. I want to see candles, and I'm just looking for the spark charts here. What I'm looking for, so one, BATL here. So, okay, this looks good on the screener, but then, what I'm looking for is my 5 rules. I'm looking for one of my 5 rule setups. Does this
Right.
meet it? From here, like, okay, maybe that could be a diagonal. That has my attention. So then I'll pull it up and look at it, and it's like, not really. It's a recent IPO. No, not really meet my criteria. And you can add in other criteria here to filter out like specific stock offerings or like funds or things.
Do you ever
But that's
bring
okay.
in market cap or volume?
For this screener, no. For other ones that I use, I'll use market cap and or volume.
Okay.
But yeah, I'll scroll through these and just see if anything catches my mind. So one that we had last week, Sensei, SNSE, I pulled that up. So, looking at the chart here, last week it had a little bit of like a flag pattern to it. It looks like it could have met my 5 rules. So I throw it on a list and I throw it on the yellow. So I just add the quick color flag here, tag it as yellow. Yellow
Okay.
means, hey, pay attention to this. It means, okay, like it could be something, we don't know. So, last week, we didn't have this candle. So last week we saw this. Yeah, we saw that. So like, okay, it looks like it's potentially breaking out. This is something worth watching. So I just throw it on a yellow list. And this, the first pass is just like anything that's worth paying attention to. SNDK. So let's pull that up. That would be one. SNDK. Okay, so it's been strong. It's had a lot of momentum. It's pulling back a little bit, but this is a very strong name. It's got a good trend. Yeah, I want to pay attention to this. And then like bigger picture market context, SNDK is one of the memory names, right? Like it's been very, very strong all year, right?
Okay.
So and again, that aligns pretty much to the quarter. I guess we've almost had one quarter, and it's up,
Right.
basically 50%. So yeah, this is something to keep in mind. And then what we're looking for is for it to show us a entry point for the 5 rule criteria. And you can see here earlier in the year, it did. But again, what we were talking about, the 20-day price is below the 20-day and the 20 days going down. So even in a name like this, what happens? It breaks and then it gets sold off, and it breaks and it moves a little bit and then it starts to sell off again. So,
Right.
and you're just scrolling through here, and the idea is this doesn't take a lot of time. Like if you look at the spark chart and it doesn't look like, oh yeah, that's a setup, keep it moving. Right.
Fair enough. Yeah.
So like Western Digital here, WDC, again on the chart, it looks like it's got a little bit of a flag to it. 5 rule pattern. So, it could potentially form some kind of a diagonal here. Maybe. So worth looking at. And that brings me to my next point. So the memory name, we just saw 2 memory names.
Right.
SNDK and WDC. And I bet there'll be a couple more on here. So as you're looking at these names, pay attention to the sector. What sector, what theme are popping up on your screeners? And right now, I can tell you when we're going to go through these, we're going to see memory names. We're going to see a lot of oil, a lot of energy, and then probably gold and silver. And that's a very good indicator too. Like if you see a lot of things in a particular theme or sector, make a note of that, because a C plus setup in a hot sector is better than an A plus setup in a cold sector. Because again,
Okay.
it talks about it, think about again what we said at the beginning. Think of the tide, think of the theme. If institutional money is flowing into, like all the AI stuff, remember like 2 years ago when AI, like, everything AI was just fucking ripping. It kind of felt like the .com era again, where it was like, anything that called AI just ripped. Well, so, I mean, you want to look in that area. You want to look in that theme for things that are doing well, because it's going to be sucking in money from the rest of the market. And if you're looking at things that
Right.
aren't in that sector, that's fine. You should do that, but it's going to be much, much harder for, Kroger to be running if all the money's flowing into AI. So pay attention
Yeah.
to the sectors. And again, it's not that if you see something that's like a one-off that you shouldn't play the setup, but when we get down to like portfolio management, you only have so much money.
100%.
And so, if you have room to take 3 trades and, you got a list of 10 stocks, well, which one should you take? Well, you go to the hot sectors first. Absolutely go there. And then, if something else just doesn't make the cut, it just doesn't make the cut. So, other things like here, ALM, that catches my eye. So you look at the spark chart here, like a little bit of a diagonal to it. All right. So then I just pull it up real quick. Okay, ALM. Yeah, see, I charted it before. It looks like it had a bit of a diagonal. So let's see. It's getting some support here. Looks like that could be a potential area of price support. So yeah, it's on the yellow list, and you just keep watching it. Keep it moving. Again, right now, we're just trying to quickly look, what should I pay attention to? Biotechs, you're always going to get some biotechs on here because biotechs just, they don't give a damn about the market. They're going to do what they're going to do. We're seeing rare earths, mining. Yeah, and just quickly scroll through. Like here's one, ERAS. And if you see something and you're not sure what it is, then look it up real quick. What do they do? ERAS.
Yeah.
So hey, there's a potential double top. Have a level of price support. It's making higher lows. Okay, so higher lows here. Little double top. Yeah. This is worth paying attention to. For this, I'd go ahead and throw an alert on it. If this goes over 1637, I want to know about it. Because you could play, this is a setup you could play. A close over 1637, a close over that. Let's say tomorrow, Monday. If it closed over that, you could take this entry and your risk would be, I'd say right here. That would be your recent higher low. So, okay, I'll pay attention to that. So let's add that to the list. Yellow. And then just keep it moving. Next. Here's one. This looks good. HGRAF. Let's see, HGRF. I like 5-letter stocks. I really like this. Yeah, this looks really good right off the bat. Really good. So we don't have a wick here at the top. That's fine. There's your diagonal. We have, okay, there's our low. We're going to get price support right here. And that's our higher low. Cool. Okay, so and then that would be our higher high here to officially trigger that. Okay, so there's our, one low, a higher low, price support. Here's a 200-day. That's cool. Here's our higher high. There's our diagonal. All 5 rules and volume. So on these green days, we see some outlier candles or volume bars. But in general, as price moves to the apex of this setup, what is the sell volume doing? It's declining. So sellers are running out of pressure here. They're running out of the ability to keep price down. And as they run out of pressure, we start making higher lows. So that confirms that not only are sellers running out of shares, but that also means that buyers are starting to step in. As the sellers are running out of pressure, the buyers seem to be gaining control. And again, kind of think in your mind, well, what does the market look like over the last week? It's the opposite. So here's the last 8 trading days. Since then, the market is down 7%. This is actually up actually more than 10%. So that's a good sign. So yeah, HGRAF. And again, what do they do? Clean power. So energy. Yeah, not surprising. So, and you don't have to have your plan together here. But yeah, I'd go ahead and throw an alert. For this one, if it gets above yesterday's high, I want to know about it. Because that would probably start putting it outside the diagonal. And your risk would be, what is this? $5 basically.
Yeah, you're talking about 50 cents a risk.
50 cents. Yeah. So yeah, and that's the thing. Volume is not explicitly included in the 5 rules. But when you see it, that's kind of like you get an infinity stone there. Like, oh yeah, that's how you distinguish good from great.
Yeah.
So yeah, that's one. FIEE. On the spark chart here, I can look and tell you that's a good one. Although I know it had a couple of bad days this week. Or last week, yeah. So FIE, yeah, it's doing something here. The chart's getting kind of sloppy, but I'll keep it on the list. And then that's about it. Fastly, FSLY. So this is a good one to point out. So on the Spark chart here, it's not showing a setup, but what it's
Right.
showing is just it's constantly going up. It's just going up, 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 up. That's a sign of strength. Well, we want
Right.
strength, especially
Yeah.
in this market. We want strength. So I'm going to keep an eye on it. And here's the thing with setups like this, and Fastly's a good example. You're not, when names are really, really strong, they don't give you like 2-3 months worth of consolidation. Here on Fastly, it's a good example. Like 2 weeks ago, you got 3 days of consolidation and then it ripped. A strong trending
Right.
name, that's what you're going to get. 3 days, maybe a week. Again, like here earlier in the month, it consolidated for a little more than a week and then it ripped. Those are the exact kind of setups you want, right? Like
Okay.
if you get something that has like a really big consolidation, that's fine. Those can work, but these are the ones that have huge momentum, and not coincidentally, this was a gap and go setup here. That was the entry, and I'll try and circle back to that because those are the absolute most powerful setups in the market that I've seen, and I've researched a lot of this, and there are a lot of other really successful traders. They call them other things, episodic pivots, post earnings announcement drift, but I call them gap and goes. And I've got a screener for those we can look at. So yeah, you just go through those, look at them, add it to your watch list. For now, I don't see anything.
Planet Labs is on there.
Yeah, PL Planet Labs, and you can see I already tagged it.
Yeah.
Planet Labs, yeah. It moved on earnings a little more than a week ago, and it hasn't been able to move. But yeah, this has been a strong one for over a year now, so it's a good one to keep on watch. BNAI, Brand Engagement Network. I think it's like an AI-powered content creation thing. Pretty good setup here. Again, here's your diagonal, price support, higher lows above the 200-day. That would be higher highs right there. So earnings coming up. Yeah, earnings coming up tomorrow. So this could be a gap and go setup. But yeah, so those are the names. That's that screener.
This gives you a lot of chance to learn about companies too, what's actually out there.
Yeah, and then definitely like, if you see something like, oh, hey, what do they do? I've never heard of that. Just throw it in there real quick. What do they do? Okay, so
yeah, it's wild.
That's the
Even
first
there's
one.
companies with $500 stock prices. Like you think when you get this narrow, it dwindles you down to the $5 to $25 ones, but there's big companies there too with high stock prices. It's crazy.
And again, like share price is like that really doesn't reflect anything about the stock,
other than that it probably it had to get up there. Most people don't IPO at 500.
Yeah, so I mean, if you look at something like Berkshire Hathaway's A class, I mean, that's literally like $700,000. So all that, so one, that means it's probably been listed for a very long time, and they've been public for decades, and they've never done a split. They don't do that. But then they also have B class shares now, and even their B class, I think, was at one point getting up close to $1,000. But in
they
general,
split them.
Yeah. Okay.
I think, right? The B class, they split those.
I don't remember. They may have, because I know it was getting up to several $100s, and they wanted to have something for, the muggles, the non-rich people. I know one guy who he's got I forget what, like he's got like $120 million in Berkshire, and he bought it back in the like early 80s or something.
Okay.
And he just like, that was his thing. He DCA'd into it for decades. And now he's
good for him.
Now he's got hundreds of millions of dollars, and I forget how many shares he has. It's pretty much all in Berkshire. But yeah, different kind of mindset. So then the next screener I'd go through, I look at the monthly one. This is real simple. Price above $5, monthly performance over 50%. So I'm just really digging down, just looking for strength over the last 22 trading days. Here, just looking at those two screeners, 71.
Right. And so performance of 50% means that it's gone up 50% in the last month?
In the last month. Again, we want strength.
Right.
Again, especially if you consider the market context right now. What has the market done in the last month? And this is showing you 50% strength against the market. Yeah, this is a name you need to pay attention to. In a bull market, So that's worth mentioning too. In a bull market, when things are doing well, this 20, 50, 200 screener, you'll have 400 or 500 names on it. Like every week, you'll have 400 or 500, maybe more on here when times are good. And like, that's when you really have to figure out like, oh, what do I pick? Like I was using this screener. I wasn't using this one during COVID, but I was using this end of 2022 when the Fed started lowering rates, or it was before we lowered rates, but we got good inflation data. And
Right.
yeah, I mean, like October, November, I mean, this thing got up to like over 1,000. Like there were over like 1,500, like 2,000 names on here at one point. Like just buy something and the market is ripping. Right? Like those are the times, and those always occur after market dips. The best times to make money are after the market has pulled back 15, 20% or so. That's, and the market recovers. That's when you make your money. Times like this right now, and this is why I tell people, like, I mean, you see people spamming stuff about like how much money they're making right now. Bullshit. No, they're not. Right? Like I've made 17% this month, and like that's a very good month, market context considered. But like, bro, like I've had 300% months when the market was ripping. So, yeah.
Fair enough.
Yeah, when things are doing well, you'll have hundreds of names on here, literally hundreds, if not thousands of names. But again, market context, yeah, this is up 50% in a month. And what's the market doing? So,
right.
And again, you can add in other stuff here if you want to filter by market cap. I completely agree with that. The $5 thing is just like I want to make sure and eliminate the penny stocks because I just don't do that.
Right.
If you do market cap, I would say I would set a floor of maybe 250 million or something.
Right.
Small to mid cap names definitely give you the best trades. But, especially when you're learning, like it's okay. See everything.
Yeah.
What is this? ULYX. Those are some uncommon.
Yeah, while you're bringing that up, the reason I was asking is because everything I have is in Canadian dollars.
Okay.
And so if I can apply this to Canadian stocks, then I don't have to go through all the exchange all the time.
Yeah. Yeah, and
right?
I'm sure you can. Yeah, I'm sure you can.
And but the thing about trading in Canada is it's such a smaller market that the companies are significantly less.
Yeah. So, I mean, here you go. Just switch to Canada.
Yeah.
Do the Canadian exchanges. There you go. So, but yeah, I agree that is definitely something to consider. The principles apply. They'll work from one market to another. And again, this will work with crypto, bonds, gold, oil. You're playing the European markets or China or whatever. A point of note there: I don't touch Chinese stocks. I categorically, I don't. Not to go political, but like I play private. I play free market. That's what I aim for. So even like Intel, the administration has taken a position in Intel. That's no longer a free market company. The government owns part of that company. It's not private anymore. I will never touch Intel as long as the government owns part of it. You're not participating in a free market anymore. So, because, Chinese companies, at any moment, the government could come in and say, we own everything. This is all ours. And I mean, what that happens while the market's closed, that is a situation where the company could drop 85, 90% overnight.
Right.
There is no defense for that. Like, okay, maybe you're lucky you've got some puts, but like that is like, one of the first rules when it comes to trading is eliminating scenarios, eliminating the black swan catastrophic scenarios that take you out of the game instantly. Well, that's one of them. And so if there is a risk of that at all, I am not going to do it. In theory, yes, that something, terrible could happen to any company overnight. But like with Apple, for example, the odds of Apple dropping 85 or 90% overnight, they've got, $370 billion in cash. They're a tech company, right? Like everybody knows Apple products. The odds are very, very low compared to someone like Alibaba being taken over by the Chinese government, which, oh, by the way, it kind of already has. So,
yeah, they're kind of into everything over there. It makes it a little trickier, for sure.
So, I don't touch those. Scrolling through these, like nothing's popping up, nothing's catching my mind. SATL, there's something here. It says look. And that's the other thing. Like right now in this market, like it has to be a really good setup. Like it has to really
Right.
catch my attention for me to even worth considering. So this has shown a lot of strength really after earnings. So I mean, yeah, if you wanted to throw this on the list and say, okay, I'm going to look for it to pull back and consolidate after earnings. Okay. Yeah, I see that. And especially after earnings, give it like, 2 weeks or so. If a stock has a really good move after earnings, and let it calm down a little bit, kind of let the traders do their thing and insiders get back in and they start buying again. Yeah, but for me, it's not catching my mind. Yeah, AAOI, this is popping up here. It was on the other screen or two. So again, good example this past week. It showed a nice 5-rule setup. It popped, and literally the next day got sold off. Again, and this has been a very strong name for quite a while now. After earnings, this was a gap and go after earnings. I didn't catch this one, but this was a gap and go, and it's getting sold off. So worth keeping an eye on, because again, if the market turns, suddenly everything is magically back to normal in the Middle East, and like all the oil infrastructure magically gets rebuilt overnight, and all of a sudden everyone's friends again. It's not going to take 2 years like it always does. Then yeah, this could literally turn around and rip very quickly, and you'd want to pay attention to it. Like this would be one of the names you'd go to right away.
Right. So at what point, if you go back there, at what point do you move that trend line up to that other peak? Or do
You
you just
probably
draw
could
another
right
one?
now. You probably could now. I would say that would be fair, because so this here wasn't a wick. This was an open and
Right.
then drop. I think that's probably fair to move this. Also because there's a volume spike there right after that.
Okay.
So yeah, that's probably a better sign of institutional interest than where it was back there. And that's part of this process, right? Like you put you put a line down there, and it's like, okay, does that work? Maybe it does, maybe it doesn't. The one thing I would say is, so it was back here. Again, my rule is if you take this trade, now you have to leave that, because this is your visual journal. You want to be able to look back on time, as long as TradingView will, allow you to keep all your chart annotations and stuff. At a certain point, you do get maxed out and you can only have like so many lines on your charts. But whatever broker you're using or whatnot, stuff like Thinkorswim or E-Trade, they're pretty much in perpetuity. Like they're not going to move them. So, but yeah, that if you didn't take the trade and it looks like, oh no, this looks like a more clear pattern, this more clearly fits the rules. Okay, well then adjust it.
Fair.
That's an important part of trading, is being able to recognize when you're wrong. Like, oh, I thought it looked like this, but in reality, now that I have a little more information, maybe the trend is over here. ZD, this has my attention. That catches my attention. ZD. So was this an earnings fill? No, this was not after earnings. This was, well, not on earnings. It was after earnings. Had a nice pop here. So, okay, something happened here. There's a trend line. We got a gap. It tried to fill the gap, but then held. That's a really good sign when you get a big gap in price for some catalyst, some reason, and price tries to fill that gap, but it doesn't. It gets bought up and starts moving up. That's a really good sign that buyers are coming in and saying, no. Whatever caused this catalyst is legitimate. Like there is a real reason to own this stock at this price. So pay attention to those especially. Price support maybe right here. And so here's a low. Here's another higher low.
Off to
this
the
looks
left,
good.
you could see there's a high there.
Yeah, there's a high there again. So
yeah,
if you keep going, look at that. In this area, there is action. And it looks like now what was resistance is turning into support. So that's a very good sign. You kind of get a zone here where when price comes down into this level, it's getting bought up. So yeah, this is a good one to keep on watch. We'll throw this one on the list. And then I was trying, keep it moving here. Anything else? APA, that's one. So it's just like straight up APA Corporation.
Cheapers.
Look at that. See, I mean, like, I don't know what the hell happened, but some kind of good news, because this is up almost 100% in the last month. So yeah, throw this on the list.
What do they do?
I don't know. And so you look it up real quick.
There, that's the one.
Hydrocarbon exploration. Ooh, yeah. So that's energy related. Hydrocarbons. Yeah. Yeah, that's a very good industry. Some subsidiaries, they've got some petroleum companies. Yeah, founded in Houston. Yeah, they've got oil company backing. Oh yeah, that's a good one. That's
Yeah.
a good one. Yeah, straight up. Yeah, this is one you want to keep on your watch list. What is it? Oh yeah, long-term trend. Look at that.
Jeepers.
Yeah, last April a year ago it was 13. Now it's 44. Yeah, this may have popped up on the other screener and we just missed it. Why did it not? 2050 200's correct. It might be the 3-month. Yeah, this probably hit the other screener too. We just missed it. So either way, yeah, this is one you want to keep on your watch list, and then look at the volume. As price is going up, you're seeing more volume come in. That means that it's still not priced too high, right? Like as price goes up, if the volume starts dropping, like it kind of did the last week or so, that's a sign, okay, buyers are maybe running out of steam. Maybe it's getting to be like fairly well priced. But as price is going up, more buying is coming in. That means it's still not high enough. Like people are still interested the higher it goes. Well, as a trader, that's what we want. That's a sign of momentum. But yeah, this should get a pullback at some point, and yeah, we want to pay attention to it. So yeah, you add it to your watch list, and then you just check on this thing every now and then. Okay, so that's the rest of that list. The next one, I'd look at weekly. So for weekly performance here, I'll pull the market cap filter off. Same thing, $5, and in the last week, I want to see at least 20%. What do we have? 100 stocks, 100 in the last week. With the market cap, you would filter some. And look, some of these are like really weird, like share offerings.
Right.
You just scroll and don't even pay attention to those. What is that? ECG, my eyes killing me. EGG, egg.
Yeah.
Okay, so it looks like, yeah, they had news of some kind. It's a little, the price movement here I can tell is a little wonky, a little thin here. So, I mean, you could, but you might want to do some more digging on that and see like what's the float. It could have a really, really light float. There's just maybe not a lot of interest on it because there are a lot of days here where there's like literally no volume.
Right.
So that's not a good sign when you see no volume because that means there's no price action. You do want to see regular price action. And you can add in some other things here, like if you want to look at the average daily range or average trading range or what percentage of the float trades every day. The dollar figure that trades. I have it on one there. You can, look at that too. Those are good filters to have. But yeah, egg, okay, it had some momentum the last couple of days. I'm not going to throw it on the list. And then, yeah, you just keep scrolling. And you'll learn, as you get better at this, I mean, it just takes seconds. Like you can just scroll through this, like literally without stopping, and the right things will catch your attention. ADV, that's got a little something to it. Looks like it could be breaking out or reversal. Nope. What? Did I type in the right thing? Advantage Solutions. There we go. They just had a reverse split. So that's reverse splits are nice because shares were taken off of the market. But if they had some kind of a catalyst as a reason for the reverse split, lots of times price can drift up very quickly after a reverse split. But this is a good one to point out. So short-term momentum is strong. Big picture, it's below the 200-day moving average. When the market's below the 200-day moving average, I don't like buying things that are weak. I like if it's been Invio, for example, Novo Nordisk. I tried this and lost money on it. I made a little bit on the move up, but like this is a potential reversal. It's already weak and the market is getting weaker. This is on the chopping block, right? Like the weak, think about how nature works, right? Like, if you have a pack of wildebeest or whatever in Africa, like what are the first ones that get killed? The sick and the dying.
Right.
Those are not the ones that you want to be trying to ride. Right, for a poor metaphor there, but like that's the point. The sick and the dying are below the 200-day moving average. Like that's not where we want to be trying to trade, unless you want to try and short them. Now that's a different story. If you're looking for, okay, the market is weak, let's look to find something to short. Well, then like SMCI. Yeah, see, this had the 5 rules set up. It was below the 200-day. Oh yeah, the sick and the dying. That's what you want to short. Don't short strength, right? You don't short strength. No, no, no. Now there are like parabolic short setups. That's different. In general, like if something is strong, don't short that. Like don't like if you want to lose money, just send me your money. Like if you just don't like money, just send it to me. Right? There are charities around here that could use your money. Right? Like just don't do
Absolutely. So like
it.
a rising tide lifts all boats.
Exactly,
Except
right? Like why are you
if the
fighting
tide's going out.
Yeah.
Yeah.
So yeah, there's some other ones here.
Kodak is still a company.
Kodak is still a company. Yeah. It's been on the watch list for a while. We've actually charted it. Yeah. Kodak is still a company. You're old enough to know what Kodak is. A lot of people won't even know what the hell this is.
Right.
Yeah, they make film for cameras, not digital cameras, for cameras. Right? Like Polaroids and the wind ups and like just the old school where you had to like pull it out and put it in the back of the camera and close it and then it would wind. Like
They have to be diversified now into something else, no?
yeah, I'm sure they are. So I was talking about this with my wife not long ago, and she said that they're actually kind of getting popular again. The like disposable cameras and things. So yeah, but I'm sure they've diversified.
Do you think VCRs will come back?
There's no way with AI now. No, no. But yeah, we still have some. We at this point they're just like we're holding on to them. We still have some VHSs, and it's like yeah, we're moving to Italy, but we're taking these with us because like nobody knows what these are anymore.
No,
So,
nobody.
but yeah, Kodak. So this is one. It's above the 200-day moving average. I mean, yeah, like it's Kodak, right? Like it's got to be a dying company, but like, hey, if it can give you some momentum and you can make some money off of it, then why not make your money where you know?
If you'd have bought right after that, it closed above that trend line. You're up.
Yeah.
Almost 50%.
Yeah, down here, right off the 200-day.
Yeah,
you could have made money, and that's worth pointing out too. Kind of on these, why my strategy is set up the way it has. So, I have run all my trades that I've ever taken through. I have an AI agent or agents that I work with now that work for me, and they've analyzed my trades. I've got it to understand like my brokerage statement and everything. Hands down, without a doubt, the best trades for me always come right here. They come when the 20-day moving average is right here on top of the 200-day. You get a diagonal, so you get a trend and a pattern that compresses. We get higher lows, either just below or just at the 200-day moving average. Like it is not even close. Out of my top like 50 trades, 49 of them look like this. They all look like this.
That's wild.
So yeah, and so maybe that's confirmation bias, right? Because like that's how my system is built, is to try and catch these. But so another point of emphasis. So looking at my performance last year, I think I made like it was like 678% last year.
Okay.
My second best year other than COVID. 5 trades accounted for like 85% of my entire year, and every single one of them was this.
Yeah.
It was gold, silver, ASML, Tesla, and Reddit. And every single one of them had this setup, and they accounted for 85% of my entire yearly performance.
That's fantastic. The other part, before we leave this part here, is at $7 to $10 a share, small accounts can buy, enough shares to matter.
Yeah, exactly. Yeah, you can get in enough here to matter, and you can manage it, right? Like, if you've got a $5,000 account, right? Like you can still buy something that's $200 or $300, but like how many shares are you really going to take? I mean, you're going to take like 4, 5, 6. You don't have a lot of room to manage.
No.
And that's very important, right? Like you want to be able to take some profits as price moves up. And then here, it gets to the top of the pattern. Well, you should be 75% out. So you're now down to your runners. Well, like, I mean, if you've only got one share of a $200 stock, it could keep running. It could go from 200 to 1,000, but yeah, it's easier for smaller accounts to manage and, work your way in and work your way out if it's something that is more liquid for you. And so this is where, bigger names, options may become the way you have to play them. But yeah, that's a good point. And, so Kodak here, it just hit the top of the pattern. This is a good one to watch for a pullback. Does it now give us a higher low and start to make another run at the top of this pattern? So it kind of maybe comes back down here around like this area, find some support, make another run up here, reject it, and then get one more push. So it's like 1, 2, 3, and then go.
Right.
That's how that could look.
Yeah.
Let's see. Axle Brands, that one. AXIL, that catches my eye. Yep. So right here, right off the bat. There we go.
Yeah.
So you're a little late to this. Good volume on the break. So here was the day that it broke, and look at that. The day that it breaks, there's big volume.
Yeah.
What do you know? That's what my strategy is set up for, because that's when it happens, right? Like that's when it happens. It clears the 200-day. The next day it breaks the diagonal. And what do you know? The volume steps in. Not on earnings. There's no earnings here, but sure enough, that's where it happens. There's one last chance for an entry, and that would be right there, 734, because now you have an official higher high. So this I would say, okay,
Perfect.
now the trend is for sure going up, and your risk would be the 200-day 640. So you're risking less than $1 per share. But again, it's a $7 stock. $1 on $7, that's like 14% risk.
Yeah.
But yeah, this one, let's throw it on the watch list. This one to keep a watch on. But yeah, that's how you do it. And then from here, so I would have an orange list. So this is a list of everything. So you have your potentials that you want to watch for, and then you just go through and look at them, scroll through. Okay, is this one I want to keep on the list? Yes or no? SS, yeah, we'll keep it on the list. ExxonMobil, yeah, we'll keep it. POWL, okay. VO, yeah. So this is kind of what we were talking about with Kodak. It comes up, makes a high, tries to get going, right? And so this didn't pop up on any of the screeners we just looked at, but it's, I have a long-term position here. Yeah, keep a watch on it. SOC, this was on one of the watch lists. Keep watching it. SNDK, yeah. Zypher, yeah, I'll keep watching it. And so you go through here and just watch things like, do you want to keep it on the list? So you're just trying to weed out your list. Has anything broken down that did look good and now it looks like shit? Okay.
And so do you just run one watch list then? You just carry this watch list and this is what you look at?
So I have 4.
Okay.
So Netflix is a good example. Good timing there. So for Netflix, this one would be one I would say this moves from, okay, yellow, this is potentially breaking out. This is actively breaking out. It broke out on Thursday. Thursday was the day to enter. It has pulled back. This is like actively trying to go. So I'd move this over to a green list. So this is no, like, you take a position today. Tomorrow's open, you take a position. Like this is like right at the pattern. So see if we can find some others that might be worth moving. This one, so this goes away. That doesn't look good anymore. APEI. So this one should be moved over to the green list because this is actively broken out. But now it's kind of to the point where like it broke out, but now it's starting to consolidate. So like, okay, maybe it goes back to this list. Turn, this is one we can pull off. So I've been in this for a while. They're getting bought by Merck.
Okay.
But I exited the position. They're getting bought out. I no longer have an interest in it. The trade's essentially over. So UEC, this would be one. So this is a uranium refiner. I would say this goes over to the green list. Like this is actively doing the thing. Like this is pay attention to it. Like literally, if it breaks the previous day's high, you want to take an entry. And the 200-day is right there. So like it's going to do something. Either it loses the 200-day and you no longer care about it, or it breaks yesterday's high and the trend is initiated. So yeah, this is one. Okay, I want to put it on the green list and make sure to pay attention to it.
So you really only have to check the green list for trades.
Yeah. The yellow list, that's kind of at the end of the day. Like, okay, did anything change? Did anything move? Like during the day, if you have time, like pull it up, have some alerts set. But yeah, really the green list. And then I have one more that's like my active positions. Those are the two that I would flip back and forth between. EEM, so this is the emerging markets ETF. It's losing support here. But this is a long-term, like structural play. I want to keep on the watch list. KOS, yeah, AOI. So yeah, Smith & Wesson. This is one. Yeah, this should have been moved, but I didn't take the trade. I had a pretty good day. This is the Smith & Wesson, the gun maker.
Yeah.
So yeah, that could have been moved over to the list. That's fine. TPL. Yeah, this is a really good one. Nice long horizontal consolidation here. It's an expensive stock. I get it, $500. But yeah, a close over 546 and you take an entry. If it closes below that range, we kick it out. Not interested. Pollo Loco. So this was a gap and go that we entered. And now it's basically looking like it's consolidating again. So this did get moved back over to this list. It won't meet many of the screeners, but it's a name we've played, and it showed some strength. We made some money on it. So I move it back over here and start paying attention to it. Q, Sensei, Ethereum, how's it doing over the weekend? Okay, yeah. Ethereum, this is a good one. Yeah, it had broken out a couple of weeks ago. Was looking really good, had a nice setup, and then last week it's like, damn. So move it back over. This is one, this is on my targeted list though, because I have a position here. I have some entries. And if this closes, so I have a hard stop now on Ethereum. If price touches, I need to see exactly where that low is. But if price touches that level, I'm out. I'm cutting it. So
Gotcha.
Hopefully it holds. Marvel was in it for literally overnight. Had options on it. They went like 75%, and I rolled into profits. So I still have some options runners. It's one of the very few positions I have open. Again, one of the market rules, like anything you get a profit on, lock in your profits quick, and then just leave your runners. So, but yeah, Figs, this is another one. It broke, and then I did not quite get stopped out. So now my stop is low of day on Friday. My stop was Wednesday's low.
Okay.
Closed below it. So now my hard stop is the bottom of Friday's low. And that'll probably get smashed tomorrow. BNAI might be pulling it off. Planet Labs we talked about. So, okay. So yeah, then I have the other list would be weekly watches. These are things that like I have active positions in. So First Majestic, Hecla, and this is also like silver and gold. I'm always paying attention to silver, gold, and oil. So they're always going to be on here. Barrett Gold is a position that I have. That's a long-term holding. Light. This could be on either list, green or yellow, but this really has my attention. It has a lot of strength, and I want to pay attention to it here. Copper. This is one of my like top themes for the year. So ERO and CopX. Alcoa, NTR. So fertilizer name, starting to have a really nice setup on it. So fertilizer play because of the war. And now that it looks like the administration has given Iran the idea that, hey, we should have a toll on the Straits of Hormuz. So now everything going through the Straits of Hormuz permanently is more expensive. We're doing a great job. Winning. DHT, CF, another fertilizer name. So yeah, these are just like a pared down list of things. Some of these I can pull off here. Oclo, CCJ, Oclo, HWM. It's holding. This has been a really strong name. Bloom Energy. It's gotten no. It's still holding that range. This is just another like long-term, very strong name. I just want to keep an eye on it. Lockheed Martin. There's war going on, right? Lockheed Martin.
Should be going. So this is
Derna, yeah. So this is this would be the two watch lists I pay attention to. The green and this one. Sorry, go ahead.
Yeah, you do a lot of watch list management in this, where a lot of this stuff you can do after hours. Yeah. When the market is closed, you can go through all this on a weekend or in the evenings.
Yeah, exactly. And
so it kind of opens up.
Yeah, and that's where your money is made. To be honest, then I've said that several times. Like traders make their money when the market's closed, doing this kind of stuff. So that way you have your game plan together. You know where to look. You know what to enter. You can set your alerts, set your buy orders, set your sell orders, and the market opens. And it's pretty. Think about it like a football game or anything else, right? Like the game is won or lost in practice. Like once the game happens, you just execute what you practice, right? Like if you have a good plan and you're well prepared, and everything is functioning correctly, then it's just a matter of, okay, does the plan work or not? If the plan works, cool. If the plan doesn't work, okay, you go back to the drawing board, come up with a better plan. But yeah, absolutely. Perfect. If you're working, you don't have time to spend a lot of time around the market, watching the screens, cool. Yeah. You don't need to. Like you don't need to spend hours a day when the market is open watching stuff. I mean, 15, 20 minutes at open or 15, 20 minutes at close.
Yeah.
Just to like make sure your orders are in place, make sure everything's the way it is. If you entered a position, make sure like, okay, is this exactly where I want it? And then put in your stops and your profit taking orders.
Yeah.
Like that's all you need if you put in this kind of work after hours or before the market opens. Like you got to do this kind of stuff. Come up with your own system, your own way of like paring the list of 15,000 stocks down to 50, 75, 100. And then from that, okay, what are the like 10, 15, or 20 that I really care about?
Yeah.
And right now it's easy because that list should be very small. And then the only other one I would have would be I have a red list. So this is kind of the shit list. These are things that like,
okay.
If the market breaks down and you're looking for a short, you look here, right? Look for a short. And then, I do have other lists that are just like, so I have sectors, right? Like if I want to look at the sectors and see how they're doing, so I can quickly pull that up.
You also probably want to look at sectors if you're going into a company that you're unfamiliar with that's in that sector.
Yeah, that's a good one too. If you're not familiar with what they do, definitely.
Yeah.
So yeah, XBI. So like you're looking at a biocap name, you want to see like, okay, well, how does XBI look? How are the other biocaps looking? Get an idea, because that's a good point. Like if you find something and like, hey, the stock looks really good, this chart looks good, but you look at like its 5 or 6 competitors and they're all just tanking. It's like, okay, well, is it because they're eating the market share? Because it could be like Celsius from a couple of years ago. All of the like beverage companies were just dying, and it was because Celsius was eating their lunch. Like Celsius was grabbing market share like literally week after week after week, and it was ripping. So in that case, yeah. But if not, there's no like narrative or there's no reason why. Watch it, pay attention, but maybe
they could be late to the failure, or
exactly.
That could be the early one, and then maybe one of the other stocks is your train ride.
Yeah, exactly. So that's again context, bigger picture sentiment. The market and sectors is very important, and that can save you from a lot of bad trades, and again help you look in the right direction. Because also, I mean, if you find something, and like there's a sector of 10 stocks and 9 of them are ripping and one hasn't, it's like, okay, well, has the market just not found this yet? Or is this like really a shit company? And if it's one that's kind of lagging behind, that could be an opportunity. But in general, on that note, I would say you go with the best one in the sector, right? Like whoever is the strongest name in the sector, that's the one you want to ride, right? Like in general, that's where you're going to make your most money. So I think that's really all for that. Yeah, I'll see if you have any questions or anything. That's really like how I go through watch lists, what they look like.
I don't think I have any questions about fine. I mean, anybody can go through and start screening and scanning and adjusting those. But I mean, the ones that you showed here are a great place to start. Yeah,
and I use TradingView. There are a lot of other, like FinViz has a great free screener. There are lots of other ones that exist out there. You don't have to pay for it. Like just find something free, something that works for you. And again, you're looking for momentum. That's what you're looking for. Find momentum, keep it on your watch list, and you're really looking for 2 things. Either something that's like actively breaking out. So like, okay, I want to enter this like tomorrow. Or, okay, this has been breaking out. Now let me keep an eye on it and wait for it to pull back. Like those are really the 2 things that you're looking for, whether that's up or down. I think it's everything that I had. Yeah, sector strength matters a lot. Re-emphasize that. A C+ setup in an A+ sector is better than an A+ setup in a C sector. Right? Like that. That's so important. And yeah, to your point, I think that's the most important thing. Like you can trade while working a full-time job. I did it as a management consultant, right? I was working 60 hours a week, flying home on Friday, flying to the client site on Sunday night, working, 12-hour days. And this is exactly what I would do. After the market close, go through, screen things, look for my targets. Does it meet my criteria? If it does, okay, then like I'll try and find like 5 or 10 minutes when the market opens, go ahead and put my orders in. And then, when the market closes, I try and come back and check again and say, okay, did I have anything that got triggered today? No. Okay, then I don't have to take any position. I don't have to take any action. Well, I had something that got triggered today. Like I bought this stock. Okay, well, did it meet my stop for the day? No. Okay, now I put in my profit taking orders. And then I make a bracket with my stop loss. That's all I need. That's all you need to do. So you can definitely do this while working. And honestly, I would say that's kind of a blessing and a curse. Like on one hand, like, you don't have all the time to like stare at the market, but that also keeps you from doing something stupid. Because so many traders, right? Like they watch the market all day and like they get, oh, it went up like, 2 ticks really quickly. So they sell their position, and it's like, well, like you're looking on the daily time frame. Why are you down here looking on the minute chart? Right. So it keeps you from doing something stupid. Like if you have to automate everything, you can just stay on the daily chart and you can ignore a lot of the noise, and you just pay attention to the big picture trend. And that's really what we care about, the big picture trend. So,
yeah, perfect.
Again, that, I'm not saying my way is the best, but that's how I go about it. It keeps me really organized. It makes it a lot easier. And then again, when the market is ripping, it's almost another conversation. And that's maybe something we could talk about later, is like, okay, what do you do when you have 3 or 4 or 500 to choose from? Like, how do you do that? Like right now it's easy. Like there's not a lot to work with, but when you have several hundred or even several thousand, then it's a different conversation of, well, how do you sort between the A's and the A pluses or the B minuses? And what do you do if you have half your portfolio already allocated and you have 10 stocks that you want to buy, but you can only afford to buy 5 of them? Right. So then that becomes kind of another conversation. So maybe that's something we could go into. But
well, that was a full breakdown of how Cam builds and manages his watch list. The big takeaway here is that trading isn't about consistently searching. It's about filtering aggressively and focusing only on the best opportunities. From market conditions to sector strength to specific setups, everything is about narrowing your attention. And just as important, a lot of the real work happens when the market is closed. Building your plan so that when the market opens, you're just executing. If you want to follow along with Cam's process in real time, check out his Discord in the show notes. If you learned anything useful, please take a minute and leave us a review or a comment. Thank you for listening. We'll see you in the next one. Thank you for listening. We'll see you in the next one. This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.